Welcome, everybody, to the Pacific Northwest Farmers Cooperative Market Update for May 12th. Before we get started, we got some housekeeping to do. And Trudi, could you help me with that?
Sure can. Just wanted everyone to know the views and the opinions of this program are those of the hosts alone, and there is substantial risk and loss of trading futures and options, which you should carefully consider prior to trading.
Okay, let me introduce everybody to you. We have Trudi Ellenbaugh, Shane Riebel, and myself, Randy Olstead. And topics today, we're going to start up with May USDA crop and stocks report, and really look at that's the major factors of the market today. And we're going to get started with corn. And Trudi, what's the major impact of corn on the report today?
Yeah, looking at report numbers, it's kind of one of those transitional things. It's the first snapshot that we got of a balance sheet of projected USDA new crop numbers. I think with corn, a couple of things that I thought were significant. And usually they don't change the yield, but they didn't change the yield from the last report, which was 181 bushels per acre. They also increased the demand on old crop corn and increased significantly the new crop demand numbers on corn. And the reason why I think that is significant is the wild card is production. And the balance sheet on old crop corn with those increases, which we've seen, is tight enough. And so when you get those pretty big numbers, I believe the new crop demand number was like 2.6 billion, which is pretty high. I think they're factoring in, is it China? Is it other country demand? What that number looks like. And I think the significance is because of that yield per acre. Is USDA using 181? What happens if it's 175? What happens if it's 185? All those ifs.
Especially when you look at the planted acres as well. I mean, you're looking almost 9 million or 5 million more acres of corn being planted, and a bushel here and a bushel there will definitely make a big difference. And also the other one too is the 1.8 billion carryover. That's a big number to crack.
Yeah, but that is a reduction, and I think the marketplace was looking for that reduction. So record high usage on new crop. Where are those increases? Is it ethanol? Is it just export demand? So all those things in the balance sheet that'll be the time will tell if that number comes to fruition and where it goes to.
Right.
Because isn't there, obviously with the ethanol being one of them and all the biofuels and things like that, where the policies change, just forced demand should make a difference in that.
Right. And then the one thing too that you always like to focus on corn too, because it is a floor for wheat.
Right.
Wheat's, the bottom is where corn's at, right?
Right.
So.
And with if these factors are true and we have that robust demand for corn, does that help with that support on wheat in the feed channels? I mean, we're going to have to go into the feed channels to get some of the balance sheet. We'll get to wheat balance sheet here in a second. But yeah, I mean, so that corn number really is going to, and if that demand is there, is really going to help give some support to wheat for sure.
Well, before we go to the wheat balance sheet, let's go to the soybeans. And Shane, would you help me out with that?
Absolutely. Big numbers we were looking at is both the projections for old crop and new crop carryouts were on the lower end of expectations. I know we discussed a little earlier about the expectations are kind of more of the pushing factor of this whole ordeal than what the actual number is. Sometimes it feels like old crop was projected carry out as 350 million bushels. Trade had that pegged between 350 and 375. Last month's number was 375 million bushels. And then for a new crop projection, they had it at 295 million bushels. Estimate, it was kind of lower end. Lowest estimate was 267 to 675. So there was no projection last month. So this is kind of the first dart in the dartboard, but definitely kind of taking a conservative note on that.
Yeah, we're looking at some of the other factors we're going to talk about, and one of those things is the China and trade deal, and that's negotiating right now, and the tariffs, and that makes me question on USDA numbers. It feels like to me that they factored some of that into that already, even prior to the announcement of these lowering of some tariffs for the 90 days. So
Well, that's kind of $1 million question because up until today we didn't know.
Right. Did they or didn't they?
Exactly. Yeah. They were anticipating maybe, right?
And if they didn't, what does that change to that
Yeah.
balance sheet?
Does it
Because
go
the
to
balance
zero?
sheet's already pretty
Yeah.
tight,
Yeah.
So yeah, I mean that's a big question mark there for sure.
Well, I'm going to take the wheat. We're looking at the wheat numbers straight out of the get-go. The thing that really glares at me is just the total carryover stocks when you get into 25 and 26 crop year. It jumps from 841 million last year to 923. I mean, you take a look at what happened. Well, they reduced our exports by 20 million. The carryover 841 came into play, and then also
They took up some
residual.
and they decreased some imports.
Oh yeah,
right?
the decrease
It
in
was-
imports by 50 million, and so it was one of those things where you look at it, it's really depressing. I mean, you have the geopolitics with U.S. and China and the trade negotiations, moving forward, the 90-day pause, the 115% reduction on tariffs between both China and the U.S. Definitely could hopefully pick up some export business, but it feels like that's a day late and a dollar short. But I guess we can get a little bit more to that later. But, overall, the production number at 51 million, you've got some really good conditions, way better than they were last year, even with acres down about 1 million acres from year over year, which, in all reality, the U.S. planted acres in wheat is down to what is the third lowest on record. And so that's a big factor. But, the crop's not in the bin yet, but so far it looks pretty good.
Yeah, I think my take on the wheat number, I think everybody was going into it knowing feeling it was going to be a little bearish, and it was. The overall, you took down the ending stocks on 24-25 crop. Again, we're transitioning from an old to a new, and a lot of numbers to look at. Overall, that U.S. For 25-26, they increased supplies. The small increase in domestic use reduced exports, ending in a higher stocks number. So that's how they got to the balance sheet. So like Randy said, and the $1 million question and all the ifs is, do we see increased exports? Do we see increased usage, i.e. wheat going to feed, food, whatever domestically, a lot of things that can change that 923 number by the time we get there. That's from a June 1 to another May 31 timeframe.
In this report, too, it did give us a really good breakdown by class, where, white wheat's pretty much been the shining star of wheat in the United States this year, where hard red winter wheat, and even DNS for that matter, has been terrible. What's our carryover in hard red winter wheat?
Yeah, hard red winter wheat carryover, 61.7%.
Yeah.
And white wheat, they didn't make any changes, just a slight moving around on some usage, but really the ending stocks for white wheat for May report was at 67, which is 22.3% stocks to use, which is, we've seen it tighter, and that really makes that white wheat need to be higher, but it's a respectable number that.
Well, when's the last time they adjusted the white wheat carryover in the United States? They never have.
No,
I mean, you could argue that there's 40 billion bushels left.
Right.
Yeah.
I mean, we've talked about it for probably 3 years running in our report that that the beginning use number is wrong. I mean, it's tighter than that.
Yeah, it definitely feels that way.
Yeah. But again, what is it?
Yeah.
We're all talking about USDA numbers, so okay, we're going to report the news.
Yeah, that's right. Keep it on track. Yeah. But the other thing, too, when you're looking at it, I mean, that kind of explains why hard red winter wheat's less than soft white wheat. That's an unusual phenomenon for us. Yeah. I mean, it's happened over the years, but hasn't stayed this long, being upside down against hard red winter wheat. But, what's going to change that? Mexico's been buying a lot of the Gulf wheat, out of the Midwest. But, we've been fortunate enough to have, countries like South Korea, the Philippines, Japan, that's been, white wheat's been what they wanted, and it's been propping us up pretty good.
Yeah. Something to be said with that. I don't think that they'll adjust the ending stock numbers like they should, even with hard red winter. But you think about, I know white wheat's been trading as feed. So you can't tell me that those kind of numbers and being lower than white wheat values, that more of hard red winter bushels haven't gone to domestic use or feed use. And so somewhere in that balance sheet coming up in this next crop year, we'll have to, or project to see USDA make some kind of adjustment in that balance sheet, because I would just have to think that some of that's going for feed, or will continue in the 25-26 crop year to go to feed, so that you can clear out some of that balance sheet.
Right. So just kind of, finish this up in a nutshell. The report was definitely, pretty bearish for wheat, somewhat neutral for corn. Very positive for soybeans, right?
Absolutely.
And that's kind of like what the trade's been saying. But, the other thing, too, when we get into our marketplace, it's this tariff news, geopolitics. There's been a lot of things happen. There have been a lot of promises made about, what's right and what's wrong when it comes to tariffs. But, the UK and the US, they signed a deal last week. Over the weekend, you had the US and China, make this agreement for a 90-day pause as far as on tariffs. Actually, they reduced their tariffs 115% against each nation. Put a lot of hope in the market. The stock market loved it, right? I mean, they're up.
I was kind of shocked that maybe because it was report day, maybe that was by design. I don't know, but
this news came out before the report. And wheat was up,
right?
But soybeans are definitely in the leader there. But Shane, when you're looking at that kind of stuff with China, especially, how do you think that's going to affect canola?
I think it's definitely going to have a positive effect for sure. Soybeans kind of been leading the way, and canola's been right there with them, being edible oils. Been a little bit of push-pull on the Chinese side. We've been looking for a lot of demand to come out of Canada and into China, and we haven't really heard a lot of news since they've opened that anti-dumping investigation. So I think there's still some more room to run, but definitely if we can get some sales of soybeans on the books to China, I think that would be definitely beneficial for canola here. And I mean, canola as well. We could ship some canola too. So,
right. Balance sheet getting tighter helps stem demand elsewhere, U.S.
Yeah, absolutely.
The only I see being just like a day late and a dollar short is when you had China come in by 400 to 500 million or 500,000 tons of wheat from Canada and Australia. It would have been nice if we had a piece of that, especially when our carryover in hard wheats are at 60-some%.
Yeah.
But if you look at back in 20, right? China did come in. They buy a lot of soft wheat, but in 20 they were having some kind of a conflict with Australia, which is that going to happen this year or not? The Australian crop, I mean, they've downgraded a little bit, especially on this report, but they're still going to have over 30 million metric tons to sell, and so that's going to be a hard challenge for us, but maybe an opportunity.
Yeah, USDA report released today had Australia at 31. So that's still a pretty big number. I mean, we've seen what's that, the fourth year in a row, fifth year of
being over 30.
So is that Australia's new norm of production? Maybe it is, but I mean, we've heard in the marketplace of cargoes being traded to China for white wheat out of Australia and some Canadian spring this last couple of weeks, and that. Again, one of the things I wrote down to talk about was phase one. I mean, so I think it has to be said that in the wheat world, if we are negotiating trade and do we get back to continuing phase one, or is it a hybrid of that? And if that is the case, which I would have to think that we, go into agriculture and the farmer and trying to promote U.S., I would think that we're going to have some sort of phase one talk, whatever you want to call it, that should be helpful for wheat.
Right.
I mean, that has to be something that we watch very closely because.
Yeah. And I mean, the other thing, too, when you start talking about, just the geopolitics, look what's going on with India and Pakistan. I mean, over the weekend, I thought we were World War III. They were talking about nuclear weapons going off and stuff like that. And then today everybody's okay.
Yeah,
but it's kind of scary times.
When Russia invaded Ukraine, we went up $4 in a 3-month time frame, and now we've got conflict all over the world, and
nobody cares.
It doesn't move the needle like it used to. I guess I don't know if that's a change of times or just times right now.
Right. But moving forward, when you're looking at market objectives, and with canola, how do you see values moving forward with the balance sheet you're seeing, Shane? I mean, what's your
What's my crystal ball saying?
Market outlook.
market
Outlook,
crystal outlook,
Ray of hope,
whatever you want to call it.
Yeah. I think there's definitely some potential to go higher. We've been kind of stuck in this $18.75, $19 range, kind of the same as wheat. They got a lot of help. The canola did back in March 31st. Stats Canada report came out and projected about 5.8 million metric tons on hand, and this is down considerably, about 38% from the December number that was 11.4. So huge reduction in just stocks just up there, which set the scale to go higher. We actually put in some new contract highs here today on the November contract. We'll see if that translates into the cash price. It's definitely been a game of short stocks on the old crop. There's still a little hope on the new crop, so there's kind of been putting a floor on that from running away too much. There's only been a reduction of about 1.7% is estimated on the planting area versus last year up in Canada. So there's going to be a new, Stats Canada report come out here in the next couple of weeks, and we'll kind of see if those numbers are projected and what they're estimating on planted acres.
So you're kind of seeing the transition from old crop to new crop as well, a little bit in the canola as well?
Yeah, it's kind of begun already. So, for guys, as you look into new crop, what you should do, I'm saying take advantage of at least maybe 100 weight an acre at this 19 level plus. Let's get something started. I know it's always spooky because it's, there's no act of God. It's a deliverable, kind of like a cash contract is what it would be. So I would say maybe max of 500 pounds per acre contracted prior to harvest, but I think we should take advantage, at least 19-20 range. Let's get started there.
Take some risk off the table a little bit.
Exactly. Yeah.
That's probably a
Conservative
safe play.
production, yeah.
Yeah. So, Trudi, index funds. I mean, we're at a record short, 550 million bushels, wheat futures. You've got tariff deals being made now. Why are
Dollars
these
at not an all-time low, but
dollar?
it's
Last year
lower,
we were,
yeah.
everybody was telling me the reason why the funds were short is because the dollar was at 104. Now we're at 98, 99. They're still short. Everybody's on the short side of this market. The commercials are short. The index funds are short. What's going to break them? What's going to get them to have a short coloring rally? Because I'm still waiting for the dead cat to bounce.
I know. I think if you had to do like a record of skipping on repeat, I think every week I talk about life of contract lows and the record, or they're not record short, but increasing
Close.
short position. And, we're going to have a short covering rally. And I still believe that this, May, June is kind of that time frame to see that. If you're talking about the weather, the production, the global outlook, that's what's going to do it. However, they're record short some KC. That usually isn't the case. I mean, we talked about the big balance sheet. I don't know if that's just all of that, but yeah, I think that you're going to have some sort of trade deal be made, solidified on tariffs, and just a real close eye on production. It's just always a volatility time frame where it's all about weather and drought and
Does China just need to be done, or does other countries as well?
right, because when you talk about China, and we've talked a lot about just their export demand and what they bring in, they've over the last few months they've taken their projected importing number down, saying they're going to be more self-sustaining and not need to have all those. And then also, like, I think within 6 days of that coming out, they also are now, talking about, maybe they haven't used the drought word, but I mean, certainly some weather issues through that, was it the western portion of their wheat growing region? And so that too is like going, okay, does that make their imports higher? And in that point in time, even if China's not buying U.S. wheat, China buying wheat
Takes off the balance sheet.
Takes off the balance sheet. So that's a good thing. So yes, I mean, we need to see some of those things. And like I said, Pakistan, India, all those, we're like such in a wild card right now of what's going to change things. And it will. But the funds, they can be short for a long time. So, but I think it's coming at some point. It just needs to have some weather. Probably is the first thing that makes that move.
And when you look at these funds being short like that, driving the futures markets down, and the exporter, importantly, he's still selling grain. I mean, but over the last probably 40 days, the grower's been busy putting his crop in the field. We really haven't been buying all that much wheat. Basis has been appreciating, something that we haven't seen in a long time. When's the last time you saw an 80-cent new crop basis?
Yeah.
This time of year, it's normally 20 or less.
Right.
And, so those are things that are, to be looked at, right? But, it still gets me where you're trying to figure out how we're going to beat that insurance number,
Right.
the $7 number. And, at this point in time, I don't see it, right? I'm still kind of hoping if we see cash get to $6.50, I think I'd be a number to start with.
Right.
But, when you're looking at those sort of things, and especially with all the world turmoil, that the change, nobody likes change, but, it's definitely happening. And, but these tariffs, all get, kind of reciprocal, as the key word is. It could be a big, benefit to us as we move forward.
Right. Like I said, the more deals that get negotiated or tariffs that get negotiated will be a good thing. We still have seen the trend of the end user and just going to say white wheat world for right now, but the end user of white wheat has been more hand to mouth. The market's been coming in their favor. They're not in there abundantly buying new crops. So we are pricing some, but we are still kind of in that discovery period. And my concern or my bearish side of me says, well, if we have is that 80-cent basis for new crop soft white, is that truly driven by demand? Or is it old crop being a tight enough balance sheet and discovery on demand? Have seen world values starting to come down on some of those new crop offers out of Russia. So, I'm not going to say that there's no demand because it's happening, but I think some of that is there because of the futures volatility more than true demand, because we've seen cash remain very, very stagnant.
Well, it's more like you're saying, it's the lack of the producer selling,
right,
versus what the exporter. I mean, everybody wants price discovery, right?
Right.
The exporter does, the end user does, and the grower, if he's not committed into it, they're enticing everybody to do something. So it probably is not that deep at this point
right.
in time.
I mean,
right?
that's a better explanation of if we see a short covering rally and futures go up 30, 40, 50 cents, is cash going to follow that? We haven't seen that on the old crop. So if it only goes up a dime, what does that do to basis? It makes it go down. So those are all we can go off is the trends that we've seen. And so those are what ifs. So if I think you've got to keep an eye on that basis. It's strong early, and I hope that's an indication for new crop demand, but right now it's not.
Okay. Well, in conclusion, I'm kind of start this off as far as the market outlook, and I realize this is May, and the June report's going to give us a lot more clarity of what's going to happen. But at this point in time, I really think you got to be looking at finding out where you start marking your grain at, what level. For me, it's $6.50 cash. I think it's a good place to start. I'm very enticed about the 80+ cent basis that we're seeing today, but every time I think we're going to stay at a life of contract low, we seem to hit a new one. But if we do find that short covering rally, it could be very beneficial. And that might be a thing you might want to look at or talk to us about. But HJs don't look like a good tool to use today because you're at a life of contract low. So why would you want to sell a futures contract? That doesn't make any sense. But, we got a long way to go before we get this crop in the bin. So.
Yeah, I think agree 100%. Quick snapshot about crop conditions.
Oh, yeah.
So we continue to increase our good to excellent. This week is up another 3%. Spring wheat is ahead of pace being planted. Corn's ahead of pace being planted. Soybeans, so those kind of things. Watching the crop conditions is going to be key right now. Things look rosy everywhere. not everywhere, but Washington's went unchanged from last week. I think Idaho and Oregon's
We're down.
good to excellent was a little bit lower. So going into that with your projections of new crop to come, I look at it the same thing. Is HTAs right now a great tool at life of contract lows? I wouldn't say that, but you got to look at the other things too. Is this a time to do an option contract? Do you buy the call? Do you make a minimum price basis contract? I think this is going to be the year where maybe not anything's the right home run, but you got to spread that risk out a little bit and do a little bit of everything. 625 cash new crop doesn't sound real great, but it might be if we're 550. So
Yeah, especially look at last year. Our new crop values were
Right.
545.
Yeah, so I
And
look at that going, how do you spread that out a little bit? I think we're going to have to kind of use all the things in the toolbox this year more than just one. And I guess the one other thing that I would say is, especially with because we've gotten good at forward hedging grain, if you have an HTA that's at a high level right now, maybe you got to put some of that 80 plus basis on there just for the price risk alone. So
It gives you some cash flow. Especially with the market being flat, you can always move them forward.
Yep.
Yeah. Okay. Shane?
I don't know if I'm as optimistic as a 650. I might get started at maybe 635 for a little bit on a new crop thing, just because it's been so long since we've seen it, and it's been the previous high. Well, I say previous high, but it's been 2 months now since we've seen that. So, but I agree, diversify. 80-cent basis plus is a win, Gotta take a little risk. If you got HJ's, winner, but not right now.
Okay.
Yeah.
Well, this is our first podcast, and thank you for joining us. If you have any questions or comments of how you want to proceed with this, or please let us know.
Definitely looking for some feedback. Want to keep putting things on here and talking about stuff that is relevant, that you find some use out of. So updates for us is always great. We're gonna do it for sure, at least after each crop report, and kind of start that as our catalyst. But, we'd like to do some more quick market snapshots more often, have them available for you when you want to listen to them. So feedback is great.
Yeah, especially if you see some more China news or, phase one agreement being enacted.
Right.
Anything that's really a market mover, we like to get out and get in front of everybody.
Agreed.
But anyway, well, thank you so much.